Good morning, good afternoon, good evening, or better yet, GM, everybody. GM, welcome to the Trading Pit. Today is August 22nd. I am your host for today, Ben Lilly. And for those wondering where the always eloquent Marconi White is, he will be back next week. Don't worry. He's doing great. From the quick back and forth I've had with him as he adjusts to his new norm with his now even bigger family. So he will be back on Tuesday, and you heard that correctly. So a bit of house cleaning here. This show is going to be moving towards Tuesday so that we can better line up the alpha that is shared on this show with the trading week ahead. We feel like it would be better served that way. So we will see. Hopefully, it'll make more sense as we unveil a new segment called Amit's Weekly Trading Range Setup. And that way, we can digest Monday's price action, deliver it on Tuesday, and help you for the week ahead. But again, more on that next week. For now, um, let's welcome to the show Benjamin. How you doing, sir?
Good,
Good. Now,
good,
for
good.
those that don't know, we updated Benjamin's name on Twitter. What did you change it to?
The whale hunter.
Whale Hunter. After today's show, you'll see just why he has changed that handle to the Whale Hunter. I think it's a great name. It helps you all better understand his unique take on the market. Now, for those that are unfamiliar with Benjamin, he's the man with me at the helm of JLabs Digital. He's our very own mad scientist and creator of our autonomous JAI trade software that now has more experience than most within crypto. It's been 6 years of trading under its belt. It's seen FTX, it's seen Luna, COVID crash, DeFi summer, and the list goes on. It's impressive stuff. And for those that stick around until the end of the show today, we actually have a special surprise in store for you. We will mention how you can get a free trial of JAI software for no upfront cost. So stick around for that. But enough of that. Let's get into the fun stuff here. As always, we like to start the show off with some light, quick hitting questions in a segment we call Rapid Fire. After Rapid Fire, we will get into some market discussion on Bitcoin, where we will talk about how you might be using a popular metric that you're well familiar with, but using it wrong. And then we'll get into the coin of the week here. I'll let you know ahead of time it's Ave, and we'll dive into what Benjamin sees playing out in the books. And then finally, we'll wrap up the show with an insightful breakdown into a new market dynamic that is flying under the radar. And it almost reminds me of how impactful Grayscale was back in 2020. It's in that it has that level of importance, but more on that soon. So let's get to it with rapid fire. Benjamin, let's start this one off here with the question on whale alerts. Since you are the whale hunter, if you see $100 million moving on chain and that alert comes across your screen from the whale alerts account, are you acting?
I'm paying attention, but I'm not taking a trade. It really depends on where it is coming from, who's moving around, why, and does it stay, you know, intricate details matter when a whale moves large amount of money. But definitely pay attention, but not take immediate action.
So it's enough to get you essentially clicking on some tabs and opening up some new bars to take a quick search.
Yeah, that's the time to open up the charts and open up, Etherscan and block explorers.
Gotcha. On that note, then, if Tether mints, you bullish or you bearish?
Tethermints in general are bearish. Sorry, bullish.
Oof.
In
Don't get
general,
that
it
one
is bullish.
confused, guys. Tether mints bullish there. So, all right. If you see Twitter blowing up with 1,000 Bitcoin being transacted from a wallet that's been dormant for years, what are you doing?
So if more than 5 years it has been dormant and larger than 1000 BTC moves, I'm definitely hedging without question of doubt. It can go wrong, that's fine, but you got to cover yourself.
But you're not acting with immediate. Are you acting with like an immediate move, or are you going to investigate some more? or just hedge right
I
off the bat?
I think typically within the few hours since such type of an alert, I would take up a hedge first, at least for a portion of the portfolio, and then investigate further and remove the hedge if it doesn't make sense. But first, you take protection in such cases. It doesn't matter who it is. First, you take an action in such extreme situations, and then you can always scale it out. It's much easier to do that rather than not having exposure at all.
Gotcha. All right. Since the theme of today's show is about the whale hunter, I got to ask if whale is on the restaurant menu, are you ordering it?
I'm the one serving them, not ordering them.
You're the supplier.
It's, yes, I supply the whales. So,
Doesn't eat his
being a
own supply.
vegetarian, especially, I don't eat them, so I just supply them, take them and distribute everywhere.
Oh, that's good. Yeah. So I had to throw that one in there. Again, his new Twitter handle is the whale underscore hunter. So if you see a little change there, that's why it's no longer Benjamin Skew. But moving on from rapid fire to the market breakdown. So here we'll just go over some recent price action in the market just to better understand what has been going on and what we expect moving forward. So this week, over the last 5 days, Bitcoin is up just over 2%, and it's painting some higher lows on the chart if you start to look at that lower time frame. Now, for those that were here last week, you might recall we discussed how the market lacked a bit of momentum. And if anything, you could see there were bids on the book, but there was no aggression taking place on the book. And so the way that we tried to summarize it up was that the market has a sense of hesitation right now. And if we did see price move into the bids and then you saw aggression following the price, then that was a positive sign. That's where we left off last week. And so, Benjamin, I got to ask, is the market still showing this hesitation or do you see something else taking place?
No, I think the market still has some hesitation, is unwilling to make a large move yet,
Mhm.
but definitely it's not far away that we get a large move.
In
Um,
terms of on chain, I should ask, is there any transactions that you're seeing take place that would suggest, what is going on with the market, whether, for the takeaway that you're kind of alluding to here, do you see, that taking place?
yeah, so there were a few transactions that happened actually a week ago, um, a few very fat transactions that happened. And typically, what happens is that when those large tether inflows happen into the exchanges, it takes a bit of time, but then a large move definitely follows. And how to deduce that is pretty much based on order flow, what we are seeing, because the whale is very tricky. He makes large moves, but he will not let you get the direction that easily. You will be sure that there is a large move coming, like more than a 10 percentage drop or 10 percentage pump of that sort. But direction, there comes all the tooling that we have built on the order flow side that we have to employ in order to make sure we are on the right page. So those type of big whale transactions have been happening last week. Prior to that, it happened when price was around 69K. So
Yeah.
after that, we had a huge down move.
You
So
had a Plotly chart, I believe, that kind of showed some of those transactions over time. Um, if you have that
yeah,
available, I'm sure the audience would.
yeah,
There you go.
I've
Yeah,
pulled it
that's
out.
the chart. Can you go ahead
Yeah.
and explain that for the audience?
So over here in the main plot, you see Bitcoin price, and in the subplot, you see the whales transaction into the exchanges for the past 6 months. Specific set of curated whales and volume is what is basically considered over here in order to track it in the most efficient manner. The red dots are the spots when it clears the certain volume thresholds of larger than $1 billion that floods into the market from these whale wallets. And you can see in March, it basically preceded a huge move to the upside. But then as time passed on, you can see that there is a move to the upside sometimes, but it results in a full retrace. And then I think in May, when we tested 72K for the third or fourth time, we saw these whales making transactions again. The same set of whales are making transactions since last week. Large billions have been moved in, and we see that as well around 14th, I think, is where the last set of transactions happened.
So
So
to
it
kind of summarize what we're seeing here, you're the scientist, you're out there, you see the whales making movements on chain, you go ahead, you tag them, you tag the wallets, and then you sort of aggregate all of their data here. And then as the aggregation amount of that wallet, of those wallets exceeds a certain threshold, it appears as a red dot on that price line on the top half of your screen.
Yes. So aggregated volume, it has to basically clear those thresholds at that specific time period in order to clear and give out a signal at that point. But
So, so
yeah.
I'm going to beat this analogy into the ground because I'm having too much fun with it. So I apologize to everybody in advance, but I got to know with these migration patterns, all puns intended there, what what does that sort of allude to or suggest that what is happening in the market or will happen moving forward based upon what you see with this activity?
Um, so over here, we see these large transactions, but I think the real story comes in when we start using it together with let me share the other one. It's gone.
Okay, so it looks like you're pulling up the Panda Terminal chart here with Bitcoin over the last few weeks in terms of price action, and then looks like I see a few metrics there. You got bid ask ratio in the first yellow line, and then you have the green and red lines. That looks like transaction count sizes that take place between 1 million and $10 million in size, and then I think at the bottom there, I see CVD, cumulative volume delta. And so that would also be 1 million to $10 million in size. So looks like you got three metrics up with price line and some white vertical lines. So walk us through what you got here.
So one thing we started observing quite some time back is that this is all data based on Binance Spot, by the way, because that's all that matters when it comes to trading typically. Doesn't matter how many exchanges that you can go through. Why are we looking at a few specific trade counts is because that's where there is a bit of a crazy activity happening at extremes of situations. And contrary to what people would think that, okay, let me give you as an example over here. You see a huge down move over here on 5th of August. We had a
Mhm.
huge down move. Then you had a huge selling trade that happened on a whale count here. The bid ask ratio was highly positive, which means there was a lot of bids over there. So a huge whale sold into the bids, and the market basically bounced the hell off. Like it just simply bounced off. Now, if you were going based on purely the CVD of the tier, right? And this tier is basically considered by a lot of people as a whale tier, that if this whale tier is selling huge volume and CVD is going down, oh man, the market is going to go down, everything is going to crash. The whales are sold, we got to get out, right? But that's not the case. When that whale basically is selling out into a heavy bid, that basically ends the downside move, at least locally. And that results in a huge bounce ahead. We see something similar on consecutive periods later on as well, where I think on the 11th of August, typically,
Well,
on
just to,
11th of
just to
August,
see if I can understand that correctly on that first one, price is going down. It's starting to show a wick, and you see that CVD is trending downwards significantly. So what you're saying is that if somebody is watching that metric get printed on the chart in front of them, that it might be deceiving them and they might be reading it wrong because what they end up needing to know is that what is happening on the bid side? Because you mentioned that the bids were very heavy. So there was this
Yes,
sort of large volume of sells taking place, but into a thick bid side book.
correct.
And that's
Because we
almost like a
see,
deceptive move.
yes, it's like a divergence if you think of it. So you would think that, okay, there's a huge whale selling, but it is selling into a fat order book on the bid side.
Mhm,
And you can see that using this specific range is 1 to 2.5% range bid ask ratio. It's so thick, it's so positive,
mhm,
and a huge whale sells, CVD goes down because it's a sell volume, of course, and everybody immediately thinks, oh, this huge selling is happening and we are probably going to crash. And that's when a lot of bottom shorters come in into the market
mhm,
and short the hell out because they're so scared. And that is more than enough for, you know, for the traders to just squeeze the hell up of the entire price action. And you see how it basically reflexively moves up. We saw something similar even on 11th of August, I think, when there was a huge purchase, but
mhm,
it was into a sell order book. So we saw the CVD spike up. If we zoom in, it will look bigger. We saw the CVD spike up into high positive, and probably everyone was thinking, okay, we are now going to break out of this triangle pattern or the resistance that we have at 61K because, well, CVD is spiking up in whale tier. So why would you be bearish?
mhm.
But that's not the case. They basically moved the needle in such a way that they trapped people into thinking that the price is going to go up. And then look at how it basically retraced all the way down to
So you got the
57,000.
days prior to that, you almost have looks like higher lows starting to paint on the chart. You almost have it moving into resistance. But then for
Yeah,
the hours ahead of that action, you had essentially a consistent bid ask that was heavy on the ask side. And then
yes.
a whale order came in that would suggest that price is getting ready to break out, but that's a deceptive move that you're saying, where it's essentially the opposite of that first scenario that you just kind of laid out. And I guess, yeah, afterward you see price over the next 2 days just trend lower.
Yes. So the key is it always has to be divergent. So for
Mm,
example, on 14th of August, we all again saw the same behavior where a whale purchase came in into an heavy ask, and then price moved up a little and then simply dropped all the way down to 56K again. So this is a divergence to the CVD and a big purchase, but into a heavy ask situation, heavy sell walls, right? But the opposite also holds true in the sense if there is no divergence, if there is a huge sell volume comes in into a sell wall, you can also see the price come down because it is a natural sell. There is a huge selling volume coming in. There is no follow up in price, follow up in bids. Basically, the ask ratio is still high. So
mhm,
price just crumbles. So you can use it both ways. In those situations, the whale CVD is basically telling you the truth. But the whole
mhm,
combination of these three things is what matters. If you just remove one of them and just use one of them, let's say if you're just using the count value to deduce if it is going to be a top or bottom, then you will make mistakes because then you don't know if there is a divergence or not between the order flow, order book side and the trade
mhm,
book side. Both have to go hand in hand. So that's the key. And if you see, even a few days ago, we had the test of 61,500, and then we dropped all the way down to 57K again. We saw both the patterns happen over there, where there was a whale purchase, which basically led into the
I
yeah, it
see.
was
Yeah.
not a divergence. Actually, it was not a divergence. Actually, it was supportive action. So heavy ask
Mhm,
ratio, price moved up a little, a huge whale sold, and then price basically dropped, and then bid ratio basically flipped to positive. Large whale purchase basically happened, and then look where we are. It basically reversed and went all the
gotcha.
way up. So bid ask ratio in specific ranges matter a lot, but the action comes in when the whale basically comes and makes an action. And always before a very big move that will happen, this whale will get active. So
Mm.
the thesis for this is it could be many things, right? Because we don't know what these guys have in mind, why they are basically pushing into a trap. Like we can say it is manipulation, we can say, there's we can cause a lot of drama. But my qualitative thesis is that someone is doing sophisticated trades over there by taking up a hedge position, or taking up a delta neutral position somewhere, or buying additional puts or calls to hedge their positions, or simply doing cross exchange arbitrage when there is this extreme moves, which makes sense because they can make money on the spreads when these spreads blow up in those corners, right? Um, but the good thing is we are able to deduce that. Once we are able to deduce that, and we have basically programmed it into the softwares, it's able to take decisions and pick up trades.
So,
This grossly improves our hit rates as well and avoids us from getting caught on the wrong side of the moves.
so I got to jump in here and ask, is this something that typically happens when we're moving sideways, or is this kind of always present in the books and on the price chart? Or
It's
like, because before, before we start talking about kind of the divergences and how to read CVD alongside bid ask ratios, you mentioned there was a lot of movement taking place on chain. And a lot of times those movements tend to precede, volatile events on the price chart. Is this sort of what you would expect to see then, on the heels of that sort of churning up the wallets, if you will?
it's a little hard to correlate and say it's 100%. It is there are odds that those timings correlate because typically it's often not. But this type of a trappy behavior, or let's say a confluent behavior between order book and trade book, it is pretty much dominant all the time. It's there if you know where
Hmm.
to look.
Hmm.
In Bitcoin spot at least. Of course, as you go for other assets, you have to find out which one is the dominant whale size over there, depending on the exchange, depending on the pair, that will change.
Hmm.
But when it comes to Bitcoin, the dominant whale size sits over here, and this basically matters a lot because you can really look forward to local reversions and also see which ones are real moves as well. Then you know whether you need to hold your position, get out of it if you are doing manual trading for that matter. And that is a
Hmm.
valuable information. That's really important alpha because otherwise, how do you deduce a good breakout? Like we see it over here too, that in the past few days after the pump and dump on 20th, we have not seen any whale action at all, right? So there's no whales basically coming in betting that there is going to be a bullish move or a bearish move. They're not trying to trap anyone. They're not trying to break out of the um, position or the triangle that is already in. So what do you do here? Basically, you do nothing. Just be at peace. Don't worry about it.
So, so right now, I mean, some of the question was hoping to get a little bit of alpha of where we're kind of headed. But if you're looking at the chart right now, you got essentially a neutral bid ask ratio. You
Yeah.
also kind of have a lack of activity on transaction counts over the last almost 2 days, it looks like 2 full days, and CBD is moving flat. So, what are you looking at for the rest of the week and into the weekend here?
What would be good to see is as we get above the 61K level, I want that green whale to basically come in and you know buy into a positive bid ask ratio, which is with good bids moving up. I want the whale also to come and buy at 61K. That would indicate that we have a fair chances of a positive breakout to the upside
Hmm.
because it's not a divergence, it's confluence. So order flow and trade book, both you're seeing a confluence, which is
So,
what I'm looking for if we get that.
if you have that confluence taking place and you get the breakout, what's your price target to the upside?
67K.
Wow, that's a pretty big
If we
move
get
there.
that, it would be 67K. Yeah. Because we have consolidated in this 10 to 12 percentage range for nearly
Hmm.
2 weeks now. And if this is going to break out to the upside, it is not stopping at 63K. That's for sure. But we need these whales to come in. Like we need to see if these whales are basically trading that move because they always trade that move, whether it
Is
is bullish or bearish.
is
They will
this
always be there.
if a break of 61K happens, is this like a 24-hour move or is it like a over a 1 week or 2 week stretch?
I think over a 3 day move is what I
Mhm.
expect. In
Okay.
probably like 3 days, I think we should be up there
So
because it
limited
will
time
probably
to
move up
act
like
essentially. Like
3% a day.
you need to see the books, you
Yeah.
need to see the order flow, like you got to remain active. And if that break does happen and for what you're suggesting over the next few days that after that break as it moves to 67, what are you looking for to see if 67 is a resistance or not?
Um, then we have to see at that point how the order book ratios are. Are the
Gotcha.
books going to be heavily ask sided? Because the problem we have is we have had sell walls from 69K till 74K for
Mhm.
nearly 5 months now. And some of those walls got filled on last month's pump to 70K, but very small, like very few walls got filled. And I think they got replenished again. So we need those walls to either get removed or get filled, which we
Mhm.
can also see on the trade count and the CVD as we get closer to the wall. But
Right.
typically, that is the range where we should start de-risking a little and wait and watch.
Mhm.
Because once we have new all-time highs, then it gets much easier uh, to deduce what the new targets will be.
And those would show themselves as heavy on the ask side on that metric there. But if those get lifted, then you might have some bids that follow in,
Yes,
which would suggest some nice
prices,
confluence.
yeah, then prices going up, and if bids are getting thicker, no doubt at all that we have a fair shot of a upside price action that comes in. But that is something we have to wait and watch if and when we get to 67K.
So right
But
now
I'm
you're
waiting
sort
for
of
this whale to
neutral,
make a move.
sort of neutral. You're watching that 61K price level to see if price does look to test it. And if it does and it breaks, to see if there's a little confluence, then you're looking at 67. Otherwise, you're sort of just kind of waiting and seeing right now for something to materialize on these metrics and then act upon that.
Yes, absolutely. Because
Awesome.
on-chain side, the whales are already making the move. We have the alert.
Mhm.
We've seen
Mhm.
it for nearly a week now. We've seen those alerts. But on the order flow side, they're yet to make a move. I don't know why. I don't know which direction they want to go ahead on, why
Mhm.
they've moved so much cash flow. The hope is that it is bullish because, like, who doesn't want a bullish market? But
Mhm.
we got to be prepared for everything. And
Interesting.
until we see another whale trade that happen over here, we do not know what is right and wrong. Like we can speculate in this range all we want. We can call it 2019 market, 21 market, whatever we want. But we need data. We need a trade flow to come in.
It is fascinating to think that you almost see this slow moving sequence of events take place on chain. You see it kind of starting to churn up, and then you start to see it sort of playing out on centralized exchanges. And then you can almost see them starting to take their positions, starting to get more active, which would suggest either upside or downside, I guess, is on the horizon here, which is it's
Yes,
fun to think
absolutely.
about. Fun to think about. But let's that was really helpful from that kind of whale perspective, Benjamin. So appreciate that when it comes to Bitcoin, as well as kind of better understanding how to read that CVD metric and how it might be fooling some people in the marketplace. So helpful there. But let's go ahead and move on to the coin of the week here, which is Aave, up 21% over the last 5 days, which is a significant move, not only in this market but when it comes to stale moving blue chip DeFi tokens, that's really impressive, especially as it has to overcome the sort of deader than a doornail Ethereum price action of late. Now, Aave up 21% over the last 5 days. If you go on Twitter, you see a ton of influencers getting all poetic about how amazing Aave is, how it's the only blue chip DeFi token that matters, and everything else is just blah, right? Help me decipher that. What are you looking at? Are you even taking into consideration what some of these influencers are talking about, how the revenue, the treasury is looking, or are you looking at something else?
Well, um, so those fundamentals are nice. It basically brings me attention to the particular token. But just because the protocol is making revenue is not the reason why I can go and pick up a trade, because that would really depend on what else is going on under the token in the order flow side. And for that reason, on the order flow and technicals both matter. Aave has been under consolidation for nearly 6 months now in a tight range. Not a tight range, I would say, but like a 30% range, and just been consolidating. And this is the first time it's trying to break out of that range. And we are also seeing some whale activity, both on chain and off chain, of course. So there's been some accumulation of tokens, or at least that's the interpretation based on some Aave whales basically moving the tokens and aggregating into wallets. It's presumed bullish because everyone wants it to be bullish, right? Nobody wants it to be. Everyone wants like Aave to go crazy bullish and run up because
Mhm.
they can then bring up their old narrative where DeFi 1.0 is back and potentially something good happens on, uh, you know, yeah,
It's like
that's,
everybody wants revenue to come in and for it to matter.
yeah,
And yet, for some reason, that narrative just keeps falling flat. And part of my interpretation, if I can jump in on this, is just Gensler created this environment where basically anything that has value and the price action might move in tandem with the uptick in value might be perceived as a security. So it's almost like you have to remove essentially that confluence of good fundamentals away from the token's price action. Otherwise, you get flown under the SEC radar. Hopefully that changes, right? And I think a lot of that has to do with what we saw, or the byproduct of that environment is sort of led to this meme coin frenzy of late. But perhaps, the second half of the cycle, we kind of get that removed. But I'm going on a little bit of a tangent there. I know that was a little bit of a soapbox. I'll throw my soapbox back in the corner over there. But looking at this Aave chart that you have here, Benjamin, I kind of see some of the things that you mentioned taking place on Bitcoin. Like for instance, I think what is that? The August 21st first price action. I can see that the
yeah.
ask was pretty heavy there. And then I can see that there was a green line there on the transaction count suggesting that there was a buy there, you got a wick, and then you kind of have that sideways price action. Is this sort of that divergence that you mentioned happening with Bitcoin, happening right here on Aave again?
Yes, it's been happening on Aave as well, but the only difference is that the asset underlying the macro order flow seems to have remained bullish overall. So any of these short-term fluctuations that we get as a result of these whale flows has been temporary. So into the sell wall, you get a huge bid. It causes a dump, but then the dump gets bought back up, not by big whales, but there are other retail traders who've been jumping in and trading. Probably a lot of other bots also trading. But yeah,
Because it
still
looks like
it
right
still
now,
validates the same thesis again. Yeah, we
r-
have something happening. And
yeah, why? Because that
we had a
looks like a
huge
pretty
bid book.
big uptick right there. Yeah, walk us through that.
Yeah, yeah, yeah. So the thesis once again gets validated over here. We had a huge positive bid book, and then a huge sell order came in, but it didn't do anything, right? We saw CBD drop so fast, but the price has basically moved up all the way from somewhere 134 to 136. Still early, but I think there is a good shot it can go back to 140 and maybe
Mhm.
even higher. Like we probably have like a trend line resistance over here, and if it breaks, it can continue its run up. But it seems someone tried to sell a lot into a bid book and basically got absorbed. And that's why you are seeing. I don't think even the bid book got filled, but they tried selling. It didn't break the bid book at all.
Mhm.
So that's why the fluctuation is very very tiny. We had a solid CVD drop all the way from 600K tokens and down to 371K. So that's a solid drop in CVD, but you know, price is happy to move up because this is the right divergence. This is the large divergence that we keep talking about. Sure, with alls, it gets a little tricky. It's not as straightforward as with BTC, but it still tells you situations where, we probably take a bit of risk off, like
Hmm.
reconsider your bias. BTC, you can in fact convert them into actionable trades instantly. But
Hmm.
with Aave and a few other tokens, you have to see which ranges basically fit, which of the trade sizes basically fit, and how's their recurrence. But we have all of these basically programmed into our softwares. We have it all, already fed into the models. And that's why I think JAI basically took a long trade from 125. I think it closed it somewhere around 135 or something, catching a very good, I think around a 6-7% move, which is quite solid, given the difficult spot that Aave was in, whether it's going to break out or not. But that wouldn't have happened if it was not for this order flow information that's basically baked in into it.
When did it take that over? 'Cause I'm going to admit some truth here. I did not even know that it took a position on Aave in the past couple days. I kind of been a bit busy. I'm
Neither
not
did
going to
I
lie
because it
here.
happened overnight.
Okay. So I
It
was
happened
asleep.
overnight. So I think after the US session closed, price just bombarded. And then by the time I woke up in the Asian session, I think by the time I opened in London session, the trade was closed. So it's already out.
Gotcha.
So that's why nobody noticed. But
Okay.
it
So if you're a
was a good
human and
trade.
you had to sleep, you're probably missing that trade. Well, that's helpful.
Yeah.
So, what is your take on Aave? I mean, right now, if you're looking at this from a kind of hour to hour type of chart, you're suggesting there's a divergence taking place. Price is likely to kind of move to the upside, kind of test some prior resistances and kind of get into that range. But is this got some long-term momentum to it, do you think? Or is this gonna kind of underwhelm the market per usual as influencers try to run this narrative through everybody's timeline?
Um, the good thing is the influencers are able to construct a good narrative based on data. So typically, we get influencers who talk about new L1s, new infra, everything without any revenue data, without any transaction data, like basically gimmicks and their own assumptions that it will do well or not. Fundamental thesis that there is another L1 required or another L2 required. Compared to that, Aave definitely has a far better narrative because it's been expanding on L2s, it's doing the
Hmm.
GHO rewards, it has the Aave V4 basically coming up and new proposals that's basically lined up. So there is a bit of hope, and the transaction data, fees data, all of that basically backs it up for a chance to be bullish. And we have broken out of like almost broken out. We're still there on the top of the range, but on top of the 6 month range is where we are right now sitting. And we are still seeing whale traps basically happen on the
Hmm.
lower time frames. So odds are that if Bitcoin doesn't shit the bed and doesn't go back to 55K or 54K in the next few days, Aave has a fair chance of, having another run up.
Interesting. Almost a resurgence of DeFi. That would be pretty impressive. I know one
That
thing
is the
that.
narrative that they keep pushing it around. But I'm not sure if that is fair for all the tokens, right? Aave is a unique piece, but do we say that it will happen for sushi swap as well? No reason to. Will it happen for some other, protocol type product, let's say for Balancer or Compound? There's no reason for that to happen because Aave is unique, like unique inside its DeFi 1.0. It's been doing well. It's been expanding to base. It's been expanding to other L2s. So that type of expansion, other DeFi protocols were not doing. So it would be a little unfortunate to think that all of those DeFi tokens will basically have a huge run just because Aave will be able to show strength. Because we saw that happen with Uni, right? Everyone came up with the
Hmm.
thesis that, okay, Uni is just going to go to $100 because they're going to give fee rewards. And then the protocol got crushed. Sorry, the proposal got crushed. And we saw what
Hmm.
happened to the price together with the other price action. So anything that is based on proposals I find it hard to rely on for
Mhm.
holding a trade for a longer period. If it is going to be based on a proposal or an event where the entire DAO is basically, a few whales, I can't trust them.
Well, even then, right? It's the individuals within those forums. They kind of know what's going to happen based upon the various voters and kind of really just understanding the temperature of the room, if you will, and which way that proposal is going to go, how it's going to impact the market. And because of that, and because this is sort of quote open dialogue that's taking place, a lot of these moves do get front run. I know with Maker, when they went ahead and their proposal, oh, I believe that was last year when they wanted to go ahead and start using Maker tokens for different use cases. There were some activities ahead of time before that proposal even got introduced into the forums. But I'm not here to be a Zach XBT. It's just a lot of those things are almost for me as as a potential investor, I find it hard to buy into them because, where's the demand going to come from, after me, for instance, on this new narrative or this new proposal. Like a lot of times I have trouble. And with Aave, for instance, as I look at yields across the board and the cost of capital, I find it a hard environment for them to remain and create competitive borrow rates within this marketplace. If I'm going to go ahead and lend my tokens to anybody that wants to borrow tokens on Aave, is that the best yield for me? And a lot of times the answer is no right now. And I do have the questions arise in my own head of, who is actually being the liquidity providers here? Because the incentives based upon what the yields are getting paid for right now do not line up, right? So there has to be some sort of subsidy taking place for that to make sense from an incentive standpoint. So I do have some questions as far as how competitive Aave can be, and sort of like a capital efficiency question. And we'll see. That's a big question mark. I see that Eigenlayer and Symbiotic are getting ready to pull in some other ERC20 tokens and create essentially what we just saw with liquidly staking tokens on ETH to these ERC20s. Can Aave remain competitive? A lot of questions. And so, from hearing what you have to say, Benjamin, I got to say, just taking it day by day. And if you are in a good trade and you can ride it, then ride it. And if it has continued momentum, just kind of keep it going. But don't create and form those biases, is my interpretation. Things do look good on the fundamental side, but don't just lock it in for a year or something.
Yeah, that's not possible at all. You can't lock it in for a year for sure. I mean, honestly, even now it looks good. You can, ladder down all the way to 120 or 125 and, just buy the dip over here because we also have the manipulative trade, the trappy trade, the bear trap trade just happened like less than an hour ago. So it's a fair shot to take the trade. But I would just look at it as a trade. If this is a real breakout, I think we have a very good shot to even go to like 200 or 250 in the next month or
Oof,
so. But
big
I
move.
don't think Aave will be able to do something totally divergent from Bitcoin because the dominance is still high on the Bitcoin side.
Hmm.
Everything is about Bitcoin right now because Bitcoin is the reflection of the macro markets right now, of risk. So I don't
That
think, yeah,
that's a very interesting mention there because I don't see it mentioned often enough, which is just, every cycle, we do have Bitcoin essentially leading the pack, and then you have altcoins move hot, and then you have the halving take place, and you almost have a reset. And that reset tends to like create this second half of the cycle that's a little bit elongated, but then Bitcoin tends to dominate again and start it fresh. It's almost like a reset. Okay, let's get Bitcoin dominance going again. And then you essentially have the flow of capital moving throughout the ecosystem. And you almost have that taking place right now. And what you're saying from a dominance perspective, like it's hard to buy into anything further downstream at the moment because Bitcoin is dominating the entire market. Am I hearing that correctly?
yeah, Bitcoin is definitely dominating the entire market right now. There and just because it is silent I feel that, Aave is still getting a shot at trying to outperform some of the other pairs. But because there is definitely certain amount of buying going on the Aave side, so I won't deny that at all. There is a little bit of bullish order flow if we zoom out and think about things. It has been trending up. It is trying to break out. It's almost there.
Mhm.
But where is Bitcoin? Is Bitcoin shit the bed, or is it going to go to 67K? Because if it is going to go to 67K, then Aave is going to go on a run. It's going to 200 or 250. It is possible because there
Mhm.
is enough buying, you know, that's happening over there that can
Mhm.
facilitate that. And you have the influencers, and price goes up, narrative comes in. People will write new narrative just to fit in whatever that feels good for them for the price. But what is going to happen to Bitcoin? We don't know. We don't see the
Well,
whales doing a move yet on the order flow side.
yeah, let's dive into that. I mean, I know you had a pretty interesting insight to share today through some of the work you've been doing and the research you've been doing, looking at sort of recent market dynamics. And if I could frame this well, for anybody that remembers 2020, there was the COVID crash that took place in March. And for the months that followed, it was a slow climb higher. And it just felt like this persistent march. Um, I believe it was all the way until DeFi summer. And then we kind of went sideways until the holiday season at the end, kind of the November, December range, where price really started to rip higher. And it was around that time that anybody that was tracking crypto Twitter and understanding what was happening with Grayscale unlocks, there was this new market dynamic that was unfolding. And Suzy was taking long call positions, I believe it was in July, and really setting up for kind of the big move that we saw in December. And at the end of December, he made the announcement. I think he was holding like $1 billion of AUM within Grayscale, which was really just signposting that, look, this is what moved the market. And now we fast forward to this season, this cycle, this halving cycle, however you want to frame it. And we have ETFs, is my understanding. Is this changing the market dynamic? Is this similar to what we're seeing in Grayscale in any capacity, or is that sort of overblowing the bullishness, I should say? And if anything, just I guess shed some light on what this is. I'm curious. Tell me more.
So I definitely do think there is, some activity that's happening as a result of ETF, and it is somewhat, um, like a new phenomenon that we see after the Grayscale replica, I would say. Not as great as Grayscale was, but there's certainly certain elements who are basically using the rebalancing situation on the ETFs on a daily basis to take up some very good trades. So during the weekdays, in certain specific timestamps, they are able to capture very good value. And there are definitely some whales who are basically following those rebalancing periods when that happens and get quick profits out of it. Um, so we have been tracking those whales. Right now, we are still doing some more analysis on it so that we can program them all into our database as well additionally. But it is very promising. So on lower time frames, like quite on real time flows, before the New York session closes, that's where we see these whales get active. And then price basically goes up at least a few percentage when they start rebalancing at that point. So that's definitely there is a bit of accumulation going on. It may not be happening inside the ETF vehicle, but someone is doing something at those specific timestamps,
So,
and it is happening in a bullish way.
so if I can understand correctly here, just before the New York session closes, and so if around the 3:30 time frame, I believe you were
Yeah,
alluding to, ETFs tend to rebalance their portfolio to match NAV, which is essentially a one-to-one of the assets that are being held relative to the value of shares that are outstanding in the marketplace. And I apologize if there was a little nuance there that I sort of glossed over there. It's been a while since I studied. I mean, almost 10 years now since I was in that marketplace. Regardless, there is sort of this activity that takes place in the market where these ETFs need to go ahead and either purchase Bitcoin or sell Bitcoin. But from what I gather, is that it's big enough in the stagnant marketplace to be substantial to follow. And if anybody recalls reflexivity and how that sort of behavior influences the price, once you get positive price action, that's going to create essentially bigger movements for what this dynamic is. Am I interpreting that correctly?
Absolutely.
Okay.
That is the correct interpretation.
So it's almost like you see this already influencing it, and it's almost
Yes.
a specific time period, and you can almost just for anybody that's operating in TradFi markets, a lot of people like trade during segments. They'll trade during the lunch period, they'll trade at the open for the first hour, or they'll trade just the morning session. Is this kind of the maturation of this marketplace and becoming sort of that segmented market in a way as well? Like, are we going to have something like these classes of traders where they only trade certain time periods?
Yes, it could be them. But someone has figured out that in that particular timestamp, they have better efficient pricing that they can push in significant volume and accumulate, which they can once again shed it out once the Asian session closes or into the London session, or potentially like a 24-hour hold until the next New York session opens up. So someone has figured out a logic over there and has been exploiting it to the core.
How
So
long has this
that's
been going on for?
think this has been going on for months now. And
Hmm,
I'm surprised I somehow missed out for months. But yes, it's been happening for months now.
interesting. And so if I were to try to sum up a little bit of what this kind of means, you have TradFi starting to create a new market dynamic that is influencing the price in crypto. It's happening as these ETFs rebalance. So is this alluding to any net flows for the next day for these ETFs? Is this a way to sort of read what to expect for the next day's data, or is there any sort of front running here from this news outside of, you
Yeah,
you
I
open up a
tried out
trade at
that. I
3:30
tried
and
to see if there is that confluence, if there is, when there is a huge negative net flow, whether it is from Grayscale or anyone, but it doesn't seem to be so. So it's not so correlated to that, net flow correlation, whether it is Grayscale or any the total net flow as well. But what I see is that there's someone using some information that they see on the daily level trading that happens on the ETF side is forecasting there is going to be a gap where they can basically profit out of, and they are performing their trades on the side, not on the ETF vehicles, on the side to capture that gap. What exactly it is, I'm still trying to figure out. But
Mhm.
they've been active in that particular timestamps and been very profitable. Like, they're in and out quick, that's for sure. But it's really good money that they have been capturing.
Interesting. So a new dynamic taking place in the market. It's attached to likely the ETFs rebalancing. Similar to 2020, this needs to, in grayscale unlocks, I should say, this should be on your radar. It's something to track, especially as bullishness starts to return to the market. This trade might get even more profitable, as I have to imagine. But really, I'm kind of all out of talking points for today. So I think I'm going to start wrapping it up here. Now, I did mention I would tell everybody how to access JAI autonomous trading software at no upfront cost. I am man my word here. So for those that stayed for the whole show, first of all, thank you. Big thanks for that. And for as far as what we mentioned on Telegram, go ahead and send a message to at Jarvis underscore AI underscore sub underscore bot. I know that was a lot. If the producer can go ahead and drop that on the screen so everybody can see it more easily, that might be helpful. But go ahead, send a message to the bot and see if you do qualify for it. And if we really want everybody to give it a try. Let us know what you think. We just released version 3 this quarter, so it's better than ever. It operates in real time. It's got battle tested infrastructure, like we said earlier. It saw the FTX debacle, it saw the Terra Luna crash, it saw the Grayscale and Zoofer cycle hype trains unfold, DeFi summer, COVID crash, and more. So again, just reach out to the bot, ask any questions you like there. Again, that's it for me today. Thank you all for tuning in, and be ready for next week on Tuesday. Remember, the show is going to move to Tuesday. Marconi will be back, so don't worry. You don't need to hear me soapbox anymore. So thanks so much for bearing with me these past 2 episodes. And I want to give a special thank you to Benjamin here for joining me today, August 22nd on the Trading Pit.